Good morning. This presentation provides a structured analysis of Tata Capital Limited initial public offering, covering the company background, issue details, financial performance, subscription data, post-listing performance, media and analyst sentiment, and finally, an investment recommendation. The objective is to evaluate Tata Capital as an investment opportunity based on financial data, market response, and long-term fundamentals. Tata Capital Limited is a Mumbai-based diversified financial services company backed by Tata Sons Private Limited. The company operates across retail, corporate, and infrastructure lending, along with non-lending services such as wealth management, private equity, insurance, and credit cards. Its market position was further strengthened through the merger with Tata Motors Financial Limited in 2025 and its continued focus on digital expansion across India. The IPO was a book-built issue aggregating approximately 15,511 crore, consisting of a fresh issue of shares worth about 6,846 crore and an offer for sale of nearly 8,666 crores. The issue opened on 6th October 2025 and closed on 8th October 2025 with listing on BSE and NSE on 13th October 2025. The price band was fixed between 310 and 326 rupees per share with a lot size of 46 shares for retail investors. Tata Capital Limited IPO objectives. The primary objective of the IPO was to strengthen Tata Capital's Tier 1 capital base. This capital infusion is intended to support future lending growth, maintain regulatory capital adequacy, reduce reliance on borrowings, and improve leverage ratios. Additionally, a portion of the proceeds is allocated towards general corporate purposes, enabling strategies, initiatives, and operational improvements. Financial overview and performance. Over the last 5 years, Tata Capital has demonstrated strong financial growth. The company reported a revenue growth rate of over 23% annually, outperforming the industry average. Net income growth has been particularly strong, growing at over 65% annually, indicating improving profitability. Between FY 2023 and FY 2025, total income increased significantly while net profit rose steadily, supported by growth in interest income and controlled expenses. However, return ratios show some moderation. Return on equity declined from 21.46% in FY 2023 to 11.99% in FY 2025, and return on capital employed also declined before stabilizing. This suggests that while scale has increased, capital efficiency has moderated. Debt levels have increased over the years to support expansion, but IPO proceeds are expected to ease leverage pressure and strengthen the balance sheet. Overall, financial performance reflects strong growth with moderate concerns on return on efficiency. Subscription analysis and listing performance. Tata Capital IPO was subscribed approximately 1.96 times overall. Qualified institutional buyers showed a strong interest, subscribing over 3 times their allocated portion, while retail and non institutional investors showed moderate participation. This indicates institutional confidence but cautious retail sentiment. On listing day, the stock debuted at rupees 330 on both BSE and NSE, representing a modest gain of around 1.2% over the issue price. This muted listing performance reflected fair evaluation rather than excessive optimism. Over the first week, stock remained largely range-bound, and over 1 month it declined marginally by about 1.6%, indicating consolidation rather than breakdown in the trend. Media and analyst sentiment. Media reports from sources such as Economic Times, Business Standard, Money Control, and Chittorgarh consistently described the IPO debut as stable but unspectacular. Analysts highlighted that the IPO was fairly to aggressively priced, limiting immediate upside. However, long-term fundamentals remain strong. Tata Capital is among India's largest diversified NBFCs with a loan book exceeding 2.3 lakh crore, predominantly focused on retail and SME lending. Strong Tata Group percent low non-performing assets, secured loan exposure, and diversified funding provide long-term stability. Brokerages have issued hold or add recommendations with moderate upside expectations over the long term. In conclusion, Tata Capital represents a high-quality financial institutions with strong fundamentals, diversified operations, and long-term growth potential. However, valuation remains the key constraint in the short term. Therefore, the recommended strategy is hold with accumulation on dips for long-term investors. The stock is suitable for investors seeking steady compounding and governance comfort rather than short-term listing gains. Tata Capital is priced for patience and long-term participation in India's credit and growth story.